Good evening, everybody. This is Johnny Seville, and this is your executive summary for stock setups for Wednesday. And today, of course, was a very important day where we set open range. So we can see the high of today's candle kind of pushing up into the overhead resistance, right up into that 2,050% Fibonacci retracement level at 2001. We can also see that there's a possible oscillation pattern forming as it pushes up. So really, the key benefactor in deciding where the market goes next is seeing where open range goes. Now, obviously, there was some great performance on one of the shorts from last week. That was probably the most notable thing today, is that as the ANAC missed on earnings and was down 10% intraday. Great profit-taking opportunity on the puts that we suggested last week. But in terms of new positions, we really just have to wait and see as to where open range goes. Now, with that said, there were two positions that came past my eyes that I thought were worth mentioning. The first was BCRX. Now, this is a company that has been obviously pummeled into the ground and is now kind of consolidating. The big threat to this is going to be the 20-day moving average. As you can see, it's consolidated like this before and failed. But right now, maybe building support with that rapid divergence from the Twigs money flow. So as a speculative play, I was looking at the June $2 calls, which I believe are priced at 48 cents. And that was one that I thought was worth mentioning as a speculative hedge on the market. The other one I thought worth mentioning as a potential long hedge is MKTO. Now, what I would wait for on this one is, given that it showed oscillation support off of the line down here, I'd really want to make sure that the risk-reward ratio was decent. So waiting for a pullback down to around, say, 16.13 would give us a bit of a better entry point, and then looking at a stop loss below the low of today's candle at 15.13. So that's about $1 of risk, but the upside is that we could get up into this $20 range. So I'd be looking at a target of around 1983, which gives us more than a 3-to-1 risk-reward ratio. Now, because of the larger percentage of stop loss, I would adjust my position to be a smaller position than I would normally take, say, in a stock that only had a 2% stop loss. And that gives us a better handle on our capital management and cash allocation. Now, that's obviously just my opinion and something that you can decide for yourself. But this was one that I thought was worth mentioning that has been on my watch list for a few days since it appeared in our scans back on February 24th. So with that, the key is to watch open range tomorrow and the next day and see if we break higher or lower. And that should be the big sign on how we position for the month ahead. So I hope that helps, and happy trading. We'll see you all soon.